Welcome back to Investing Talk Podcast. Today we're looking closely at Alcoa Corporation. You sent over some interesting materials, their latest earnings, a due diligence report, a stock assessment too. So our job is to pull out what's really crucial for you right now from these sources. Let's get into it.
Okay, sounds good.
Yeah.
Let's maybe start with their recent financial picture.
Good place to start. What's jumping out?
Well, the first quarter of 2025 showed a frankly remarkable surge in net income.
How much of a surge?
It climbed 171%.
Mm-hmm.
That landed at $548 million, which is $2.07 per share.
Wow, 171%. That's substantial. What could be behind that?
Could be a few things. Maybe really effective cost management kicking in, or perhaps aluminum prices were just very strong during that period. Something to watch, definitely. And their adjusted net income also saw a big increase, up 106% to $568 million. That's $2.15 million.
Adjusted net income.
Right, yeah, and revenue hit $3.4 billion. Adjusted EBITDA also grew 26% to $855 million.
And adjusted EBITDA, just to remind everyone, gives a sense of the core operational performance, right? Strips out some items.
That's the idea. It helps clear away some of the noise, things like non-cash items or maybe unusual expenses, to see how the main business is doing.
Okay, so that huge net income jump is really the headline there. But looking at the revenue number you mentioned, $3.4 billion. There's a slight wrinkle, isn't there?
How so?
Well, the $3.369 billion for Q1 this year is way up from Q1 last year, which was about $2.6 billion. That's strong year over year.
Okay.
But it looks like it was actually down just a bit from the previous quarter, Q4 2024, which was closer to $3.5 billion.
Yes. That's a very sharp observation, quarter over quarter versus year over year.
So is that just normal business cycles or something more significant maybe?
Could be several things playing into that sequential dip. You might see normal seasonal patterns in demand for aluminum, or perhaps global aluminum prices shifted between Q4 and Q1. That could easily account for it.
Supply chain factors maybe?
Possibly. The whole landscape there is always shifting, isn't it? You'd probably want to look at their specific sales volumes for both quarters to get a better feel for it.
Okay, so strong quarter overall, but with that slight sequential dip in revenue noted. And on the back of these strong earnings, they also announced something for shareholders.
They did. A dividend. Alcoa declared a quarterly cash dividend, 10 cents per share.
Payable pretty soon, June 6th, 2025. What does a dividend announcement like this usually signal?
Generally, it suggests confidence from management, confidence in their current financial position and their outlook.
A sign of stability.
Often viewed that way, yes. It's a tangible return for shareholders, and it can make the stock more appealing, especially for income-focused investors.
Now, alongside all this financial news, there was another interesting development.
The joint venture?
Exactly. They've partnered with Ignite Equity Holdings. It's related to their San Ciprian complex.
Right, and Alcoa keeps the majority stake, 75%, and operational control, too.
What's the strategy there? What do these kinds of partnerships usually tell us?
Well, often it's about optimizing a specific asset. It could be a way to share the financial burden or the risk associated with a particular facility.
Like San Ciprian.
Precisely. Maybe they want to boost efficiency there, or perhaps improve its sustainability profile. IGNIs might bring some specific expertise or capital to the table.
So Alcoa gets some help, potentially, but keeps control.
That seems to be the structure, yes. It lets them leverage external resources without giving up the reins.
Okay, let's shift gears to the stock price itself.
All right.
The data we have shows that as of May 7th, 2025, the price was $24.40.
Okay.
Which was actually down a bit from just a few days earlier, May 2nd, when it was $25.53. So you have this really strong earnings report, you have the dividend announcement. You'd think that would push the price up, but we saw a slight dip. What gives?
That's a common puzzle. You're right. Good news like that often boosts the stock. But the market is, well, complicated. Many other things influence the price day to day. Overall market sentiment is huge. If the whole market dipped in those few days, Alcoa could easily get pulled down with it, regardless of its own news.
So broader trends overwhelming company specifics.
It happens all the time. Or you might see some profit taking. Maybe the stock popped right after the earnings and some investors decided to cash in.
Or maybe lingering concerns about the future, that revenue dip we mentioned.
Could be. Investors might be wondering if those strong results are sustainable or if there are headwinds on the horizon.
Speaking of headwinds, tariffs, that's another piece here.
Yes, the Section 232 tariffs.
Alcoa reported a $20 million cost hit specifically from the 25% U.S. tariff on Canadian aluminum imports. That kicked in March 2025.
Right.
How big a deal is that $20 million in the grand scheme of things for Alcoa?
Well, let's put it in context. Their quarterly revenue was $3.4 billion. Adjusted EBITDA was $855 million.
So $20 million against those numbers.
It's definitely not nothing. It's a direct hit to profitability, no question. But is it crippling? Probably not in isolation for one quarter. The bigger issue is the long-term implication, right? It creates uncertainty. It might force them to rethink their supply chains, look for other sources.
Which could add costs.
Exactly. Or they try to pass the cost to customers, which could hurt demand. It really depends on how long these tariffs stay in place and if they change. It complicates planning.
So, despite pressures like tariffs, what are Alcoa's core strengths? What competitive advantages do they have?
They have several. First, they're a major established player, a leader in the aluminum sector with a global footprint. That scale gives them advantages.
Economies of scale, diversification.
Correct. They also benefit from cost leadership, partly due to that scale and their focus on efficiency. And they're recognized for leadership in ESG, environmental, social, governance factors.
Which is increasingly important for investors.
Very much so. It speaks to long-term sustainability, risk management, ethical practices. And finally, they operate across the whole value chain, from mining the raw material, bauxite, through alumina refining, right up to aluminum products.
That vertical integration gives them more control.
Potentially more control and the ability to capture value at different stages of the process.
Okay, so those are the strengths. What about the other side? What key risks are highlighted?
Well, the tariffs we just discussed are a big one. That uncertainty isn't going away soon, it seems. Then there's the broader economy, macroeconomic factors. Things like interest rate changes, global growth slowing down, that directly impacts demand for aluminum. It's a cyclical industry.
Demand goes up and down with the economy.
Pretty much. And we also flag that slight revenue dip in the last quarter compared to the one before. Need to watch if that becomes a pattern.
Now, the reports mentioned analyst sentiment. Strong earnings like these usually get attention, right?
Typically, yes. You'd expect analysts to take another look after such a positive surprise.
Maybe upgrade ratings or price targets.
It's quite possible. And you often see trading volume pick up, too, as more investors react to the news.
So something for listeners to potentially track on financial news sites, any shifts in analyst views.
Good idea. Watching analyst consensus can be informative.
Looking forward then, what should people be watching for? What are the potential future catalysts for Alcoa?
Definitely the upcoming earnings reports. Can they keep this momentum going? That's key. Also, the progress of that San Ciprián joint venture, seeing how that partnership develops and what results it yields, will be important.
And regulations.
Absolutely. Any changes in the aluminum industry regulations, especially around trade and tariffs, could be significant movers for the stock.
Okay, so let's try to pull this all together. Based on the information in these sources, what's a reasonable assessment of Alcoa right now?
Given the very strong Q1 performance and their position as an industry leader, maybe something like a hold seems reasonable based purely on this snapshot.
A hold, meaning?
Meaning the positives like the earnings, the ESG leadership, they're encouraging. But you balance that against the risks, the tariffs, the economic sensitivity. It warrants watching closely rather than rushing in or out, perhaps.
So strong performance, but definite uncertainties remain.
That sums it up well. The operational strengths are there, but the external environment presents challenges.
So wrapping up, what does this exploration mean for you, the listener? It looks like Alcoa is showing real financial muscle right now, but those external factors, like tariffs, definitely add a layer of risk to keep an eye on. Their strategic moves, like that joint venture, suggest they're actively working to strengthen their operations. Hopefully this gives you a clearer picture based on the sources you provided. We always encourage you to do your own further research, maybe check out some of those analyst reports we mentioned, and keep track of the stock's performance yourself. And if you found this useful, please do subscribe, like, and maybe leave us a comment. We'll see you next time on Investing Talk Podcast.